Hi and welcome to the Market Alert for Thursday, the 25th of July 2024. So bonds and big tech bloodbath, Mag 7 meltdown accelerates as the yield curve disinverts to 2-year highs, and stocks crash as mega cap earnings disappoint. And finally, US stocks slumped with sentiment pressured amid losses in Alphabet and Tesla post earnings, while US manufacturing PMI surprisingly contracted. And also other news, which I'll come back to shortly, but economic news for today. We've got the German info business climate out at 9 a.m, advanced GDP for the US at 1:30. The market will certainly be looking at that. Advanced GDP, core durable goods orders, ECB President Lagarde speaking, and the G20 meeting start for the next 3 days, I think it is, but day one is today. Right, let's have a look at this so-called carnage then and see what happened during yesterday's session. So kicking off with the Dow, certainly the market moved lower yesterday. The market is now trading below the 20-bar moving average in the daily chart of the Dow there. It will need to get back up above this if we are to resume any indication of getting back to the all-time highs. There's a lot going on geopolitically at the moment, of course, and certainly politically in the US as well. And again, more news on that in just a moment. The market yesterday sideways till the electronic market kicked in, moved lower, took a break, and then just before the close at 9 p.m. last night, the market moved down once more, shook out, and now is trading sideways. And prices trying to get back above the close and head towards the DB and the 50 EMA. We're also below the 200 MA at the moment, and also yesterday's high for the Dow. In the German DAX, also down yesterday. A lot of selling there yesterday. One of the highest volume days, certainly for the last 3 days or more, apart from this one. So given that it's the first week of the summer holes, it's an interesting amount of volume that's showing in the markets at the moment, particularly for the German DAX there. The market is in a bit of a sideways range, but the trend still up there at the moment. It'll just depend on whether the market holds or not. The 200 MA is down here, but we've got a lot of support to get through before we get to this level, including the 18,149 there. You could also do this as well. Let me just spread the chart out a bit and widen it out, and then you could add in some fib retracements there as well, just to see if the market heads for this target today of 18,204. 18,200 is the easiest way to remember this psychological number. 30-minute chart for yesterday, the market sold off once more. Went through the 200 MA and stayed below it for a while, came back up, then found resistance, came back, but they were determined to bring it back with the Dow, and then this failed and the market continued lower. And at the moment, 2 attempts to get back through the 200 MA in the 30-minute chart have so far failed, and the market is currently trading below the low there already. In the S&P 500, big sell-off there for yesterday, but not much in the way of volume, which is slightly odd. But then it is tick volume that is collected for the MT4 platform and not contract volume, so that may be the reason. In the 30-minute chart, prices traded sideways in the electronic session, but as soon as the cash market opened, prices moved lower there. And you can see also that prices moving below the close as well, finding resistance there at the moment. All of the averages, I think apart from the 5 MA, which is just about to turn, are to the downside as well in this time frame. So again, there's a bit of weakness around there. Watch yesterday's low in the S&P as well as we go into the opening of the futures in Germany shortly. In the FT100, still stuck in a sideways range there. You can see that range, but it's getting close to the low of this sideways level there. It's 8113.7. So keep an eye on that number as well, because if that's broken, then we could see prices moving lower once more. In the US dollar, interesting picture here, and I'll show you why it's interesting in just a second. As we can see, there's a bit of weakness around in the US dollar. It was down yesterday, came back a bit. Overnight, it is down. So can somebody tell me why this is happening then, please? Yes, you're not seeing things there. The silver market has been absolutely hammered overnight. So you can see I had the 27.95 already marked up, and also the 28.64, which I've spoken about for all of this week. Surprised that we had the demand, as you will see from previous recordings, and why it hadn't got through this level. Well, you take your opportunities when nobody else is trading. And if you're short, like the banks are, and you want to get out of those shorts, then you take those opportunities when nobody else is trading. The markets are thin, and you come in and you absolutely hammer it, and that's exactly what's happened. So the question is how much lower is this going? Well, let me just draw a few more lines in for you, because they certainly haven't finished now. Now they've managed to achieve this, we're going all the way back down to $26 is going to be my guess, and the 200 MA, because we haven't been below this for some time. So expect this to be crushed once more, either today, but certainly during the next few days, because the markets are thin at the moment. So a bit of a nimble move there, given that the US dollar was down during yesterday and overnight, and yet silver absolutely crushed. Before we get to the gold-silver ratio, let me just... I'm going to suggest something here. It may be completely wrong, but you've got the stock market already having a bad day, which they tend to use that to move the market lower. But also, you've got a situation such as this, where the news at the moment is that Army Chiefs, UK must double its lethality or be prepared for war in 2027. Everybody's talking about 3 years to war with China, Russia, North Korea. Very interesting that this is just coming out now as well. They won't wait 3 years. I mean, that's sort of tosh. But they're just priming the public once more, brace yourselves. God help us is all I can say. I despair at these people, but there you go. Anyway, the gold-silver ratio, you've guessed it, vertical. I did mention 88. I've marked it up this week, even in yesterday's alert, and we're heading towards that level. The market's not going to stop on the downside, I would imagine, until we get to 88 in the gold-silver ratio. Massive move this is, which indicates, of course, that if we just go back to the chart, there you can see the sell-off. We may be a case of having to crush the market lower. Down at the S3, this is the 30-minute of the silver price, that they'll bring the market back up off this level. There is always that option, you get out of the shorts that you've got, and then of course you get people out of the shorts, have to buy, that brings the market back. So we'll just have to wait and see. But gold holding quite nicely, to be honest with you, by comparison. Again, if you look at the daily charts, we've taken out all of these lows, whereas gold nowhere near the low of where it started its move up to the all-time highs, compared to silver, which is more or less getting there, isn't it? Was it May for gold, or is it... let's just have a look. June. No, so we've got to go back to June. I thought it was a bit too far back. So yeah, in June, we're taking it out. And that's why you're seeing the gold-silver ratio up at these levels. No surprise there for me whatsoever. And the more they talk about war, the market's moving lower, they're going to use this to their advantage. There you can see that we're well and truly on the way back up to that 88. And if we take out that 88, by the way, then there's no reason why we can't go back up to the 90s either, beyond the 90s. Despite the fact for demand for silver and whatever, but the suppression of the price continues, including here we've got 31.73 overnight in Shanghai, despite the market being moved lower. And then of course you've got 29.29, which is complete and utter nonsense, because we can see from the charts, if I just pull that back up once more and go to silver, where's it currently trading? 27.81. So if you were to fix that against that at the moment, you would end up with a difference of over $4 there. And again, it's just madness. And again, it goes to prove that the price is rigged using the derivatives in the West compared to the physical markets in the East there. Okay, let's have a look at yesterday's trades, see what happened. It started off very quiet, and then we had a bit more movement at 7 a.m. as the market moved lower, taking out Tuesday's low there, and then sitting on the S1 before we got to the cash open, which saw the market spike down and then spike back up. And then we had all of the flash news, and I mentioned yesterday and in previous market alerts when we have the release of the flash news, how the market will be whipsaw. And there you can see it as well. Yesterday, after we had the release of the first lot, we then waited for the German. I think it was the French first, then the German. You can see how quiet the market was there. Adding to the mix the school holes as well. And then this was followed by a sell signal, which cancelled out the buy or stopped it out with a loss. The prices then moved back again after hitting the scalp and then back down again. This time I got out too soon. The market continuing to move down there until the last economic news item of the morning. Prices then coming back to the scalp and the 50 EMA, where that created a bit of resistance, but the market managing to get through this before finishing off for the 10 a.m. cutoff. Prices then trading sideways to higher, and then we get into the afternoon session where we saw the Dow moving lower. We've got the manufacturing numbers from the US there, and other news, prices moving lower, and then continuing down for a moment or two before they came back there. I wasn't at the desk in the afternoon there, which is why the lines are still on the chart, but at least an opportunity to get a few points back. But otherwise, prices stuck in that range, and then the selling coming in later on in the evening. And then, of course, as I've just said, overnight silver getting absolutely hammered, and I suspect that's going to continue for the next few days. But down at the S3 at the moment for the silver price, and the US dollar down as well. They're actually inversely related, so again it just goes on to confirm what we're seeing here. Okay, that's it for this one, and yeah, let's see what happens. Have a great day, and as ever, thanks for watching. See you in the next one.